Maria, good morning. Thanks for having me. Yeah, the quarter was exceptionally strong, as you just pointed out. Doug McMillan at the end of the last quarter's call said they were in execution mode, and they certainly demonstrated that with this quarter. The commentary around Amazon nipping at their heels, when you break down Amazon and look at their online store, third-party retailers, physical stores, it's about $375 billion in sales. Walmart's on pace to do $675 billion in sales this year. So I think there's still a good bit of distance there. I think, too, the commentary around the trade down and attracting wealthier customers, I think that's not, they're not able to do that without the investments that they've made over the past several years in the stores, in the people, and in their online platform. Online sales were up 22%. In the latest quarter, so you can see the benefits of the investments that they've made there.
Yeah, I mean, when I think about Amazon, I'm thinking increasingly the growth is coming from cloud and coming from elsewhere aside from retail. So point taken on the Walmart Amazon comparison. Mark, there's also McDonald's announcing plans to sell a $5 meal bundle this summer for cost-conscious customers. It's only for 1 month, though. A new Fox News poll finds 89% believe that rising grocery prices are a problem for American families. 62% say it's a major problem. What's your reaction here? I mean, it used to be like, oh, go to McDonald's, you get a meal for $1 or $2 or something. Now it's $5.
Yeah, the dollar menu. That doesn't exist anymore. I'll tell you, this $5 deal, it's a great deal. You get a lot of food for the $5, but it obviously looks like it's going to be a loss leader for McDonald's, especially if we talk about McDonald's in California, where the minimum wage is $20 an hour. So that's certainly an issue there. But look, the consumer overall, whether it's the higher income consumer now shopping at Walmart, you have consumers who are a heck of a lot more cost conscious, price conscious. They are trading down, so I think you're going to see more of these opportunities, more of these offerings over time, where these restaurants are trying to use something as a loss leader to get consumers to walk through their doors. We're seeing this at fast casual restaurants like an Applebee's and a Chili's. We've seen at Olive Garden the 75,000 income and below crowd. They're not eating out at Olive Garden as much, but the 250,000 of income and above is trading down and eating at Olive Garden more. So we're just seeing more of the same thing here, whereby the consumers are certainly tightening their belt buckles.
And all of these stories this morning, whether it's McDonald's or Walmart, it all goes back to the story of inflation. And Jay, take this on. I want to know how you're allocating capital in this environment where food, fuel, shelter, the essentials are still elevated, and part of the issue is oil, right? Oil prices, they may have come and broken $80 a barrel, but we're still talking about expensive oil. It goes back to policy. How do you trade around all of this?
Well, I think that we're actually bullish about inflation for the next couple of months. Not PC, but at the end of the month, because it's still an overhang. But everybody ignores that oil is absolutely critical to inflation. There's a 5% bleed through. It caused most of the inflation in the 70s. Stagflation is caused by high oil prices. It doesn't just magically appear. So it's terrible when there's high oil prices. Thankfully, we continue to produce a lot of oil despite any policy from the administration, primarily because of Texas. And so we've had a pullback. We think oil probably is going to bounce from here. But everybody's ignoring we had a $12 pullback. And that's going to feed into inflation. That's going to be bullish, and that's why we're keeping actually, we think our 5750 target on the S&P is too low, because we're going to get ECB cuts followed by Fed cuts.
When do you think you're going to get the ECB to cut rates? Because we've talked about this before, and you've been expecting the ECB to move before the Fed for a long time.
Right. They all but said they're absolutely doing it. Using banker speak, because they don't really say they're absolutely going to do it.
So sometime this summer?
Well, no, just, June 6th, which is 3 weeks.
June 6th.
And we think that's going to be super positive, because almost no one focuses on the fact there is no dial to reduced interest rates in Frankfurt or in the New York Fed. You have to inject liquidity, and that's what drives markets. We saw it in 20 and 21. All that liquidity injection, and you're going to get that globally. And we think that's going to drive, it's not just the 25 cut, It's all this liquidity coming in. It's going to drive stock and bond prices higher during the summer.
Well, you would think that if you got a cut from the ECB, that's even more pressure on the Federal Reserve.
Oh, yeah. I mean, I would think they would be more likely to follow suit. But the ECB, I mean, they're doing a better job taming inflation than we are. We've seen this reacceleration in inflation, which is certainly troubling. Jay, you're expecting a cut this year by the Fed?
June?
We actually think two, about 50% probability in July and 50% in September.
Wow. That's
so before the election.
I mean, that's kind of what they've been saying all along.
That's going to be criticized. If that happens in September, October, that will be criticized because so close to the election. Right. Walter, you agree with all of that?
Well, that's a lot to digest. I agree with the comments about the Fed. We would estimate 2 cuts as well. We think 1 in September and then 1 in December.
Okay.
Agree with the comments about the consumer being under pressure as well. But the final comment I would make is, U.S. has been the only game in town from an investment perspective over the past couple of years. We're seeing evidence that outside the U.S., the markets are starting to pick up, and we would be looking there as well.
And you're looking for this market to pick up as well. You just said the stocks. Real quick, KRC is a real estate play that you like.
Right, yeah, so a lot of people haven't focused on this, but the reason there's a huge homeless problem in the West is a Ninth Circuit ruling that made it cruel and unusual punishment to clear encampments from public lands. And there was a hearing already, and if you listen to the hearing, there's like a 99.9% chance it's going to get overturned.
I see.
And that'll slowly turn around the West Coast markets, and KRC, Kilroy, is mostly on the West Coast.
Great to have everybody this morning. Really nice conversation. We appreciate it. Walter, Todd.